Hey everyone, Coach Investor back to another video for today. So is it time to sell a Rivian stock if you're owner of those shares, or do you have even more upside from today? Now in the last couple of weeks, Rivian shares are up over 70%, at least at the time of making this video. Now, one of the main reasons was this report here from Rivian itself. So they announced production totals for the quarter ending June 30. The company produced 13,992 vehicles at its manufacturing facility in Normal, Illinois, and delivered 12,640 vehicles during the same period. And they remain on track to deliver the 50,000 vehicles by the end of the year. Now, this also shows that the delivery numbers are now up to 90% of the production numbers, which is much better than what we've got before. Of course, some other good news was them joining the Tesla supercharger network, and so we have more comments on that from Adam. So he sees this as a positive, with it de-risking a pain point for some potential EV buyers with range anxiety. Another interesting angle from Jonas is that Rivian may start to stand as a luxury to the ubiquitous Tesla models. I said it before and I say it again, I really like the Rivian vehicles, but from an investment standpoint, they still have a long way to go, because I do think that building a Rivian car is very, very complex. There are lots of parts, especially if you compare that to a Tesla vehicle, where the vehicle looks good, but you don't have to use that many parts, and so it costs them less to make. Right now, the big problem with Rivian is, of course, the cost of producing these vehicles. Of course, over time, they'll figure it out, but how long will this take is the question. Now, continuing here on the note from Adam Jonas, he says something about the Amazon partnership. So looking ahead, a real wildcard for Rivian is when it will break free from its exclusivity deal with Amazon. Rivian's deal with Amazon commits it to delivering 100,000 electric delivery vans by the end of the decade. Now, the CEO said during the week that the company is in the final stages of negotiations to sell electric delivery vans outside of the Amazon relationship. Now, this isn't news, because we already got a report back in March that says that Rivian seeks to loosen its ties to Amazon. Now, it's very important to note that the end of the Amazon exclusivity arrangement does not mean that the relationship is winding up. Amazon's deal for electric delivery vans in Europe is still growing, and new cities are still being added in the United States after Rivian vans have delivered more than 150 million packages for the e-commerce giant today. And also, for those that didn't know, Amazon holds a 17% stake in Rivian, which is further motivation for the company to work out a deal to allow EDV sales to other companies. Now, talking about Europe, we of course saw this at the start of the month. So Amazon announces the arrival of Rivian electric vehicle vans in Europe. So the first Rivian electric delivery vans arrive in Europe, as Amazon announced that more than 300 vans are hitting the road across Germany over the coming weeks. Pretty promising. Now, going back to the question, right? Is it time to sell a Rivian stock after it's up 70% in the last coming weeks? Well, if we want to have a look at the state of the company right now, market cap of $23.2 billion, returns in the last 3 months, 70%, year to date, 34%. As you can see, it has been going crazy in just the last couple of weeks. Now, one of the reasons here, of course, we've talked about the good news with regards to the production and delivery numbers, joining supercharger networks. But in my opinion, I think it also had to do with the fact that short interest was, I think, 10 or 13% or so. And maybe some short sellers are covering their position, pushing the stock a bit higher as well. Could be. Now, if we look at growth estimates here, so for next quarter, it expected the revenue to grow 44.45%. Of course, if you look at the huge change in deliveries and production numbers, that was bound to happen, but all eyes will be on the cash burn. Now, if we look at sales estimates for fiscal year 2023, growth expectations 146%, fiscal year 2024 90%, and then fiscal year 2025 close to 48%. So from a price to sales ratio, of course, when the stock was closer to $10, $11 or so, I think it was below 1 time forward sales. But right now, especially if you compare it to the likes of Polestar, I think it's a bit more expensive than them. And still, the business is burning a lot of cash. And so, to answer already the question, is it time to sell? To be honest, there's no shame in taking profits. On the other side, like we've seen with Nvidia, if the hype, if there is momentum with the stock, don't try and break it. Once we see that the market is done with it, if there's a clear signal from the market that the rally is over, be my guest. But again, no shame in taking profits. Now, before I continue this video, if you enjoyed this type of video so far, leave it a thumbs up, subscribe if you have not, we'd really appreciate that. We're trying to reach 30,000 subscribers by the end of the year, so hit that subscribe button. It's free, so why not? And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Alright, so up next we have a little comment from the most famous analyst on Wall Street lately, the guy who covers every tech company out there, the one who always says this company is playing chess while the others are playing checkers. It's of course Wedbush analyst Dan Ives. So he said here that demand remains firm for the company's unique EV model lineup, while production appears to now be on the road to success, as seen with stronger deliveries in Q2. Now, Ives and team believe more good news is on the horizon as they look into the next 12 to 18 months. The production ramp and cost optimization efforts are both expected to translate into better earnings, while the Amazon partnership in Europe is seen as boosting the international story. The firm is raising the price target to $30 from $25. The higher price target is set to reflect further confidence in Rivian hitting or exceeding its delivery targets heading into the second half of 2023 and 2024 with an inflection year ahead. Certainly has nothing to do with the fact that the stock is up 70% in the last couple of weeks. And then we have another comment here from an analyst at Davidson. So he upgraded from underperform to neutral and raised its price target to $18 from $11 amid a series of positive news surrounding the company, like we've talked before. So the firm said Rivian's entry into Europe with the van deliveries was expected eventually, but that it came far earlier than they anticipated. While Q2 deliveries were short of their model, they beat consensus expectations, a low bar in their view. The recent ABRP acquisition adds new capabilities and valuable data as well. And the last one here from Needham, so they reiterated a buy rating on Rivian, raised the price target to $28 and is adding Rivian to its conviction list. So they say here that they posted better than expected Q2 production and delivery numbers. Rivian is also answering the three most common questions we get across our EV OEM coverage. Number one, is there demand for its vehicle? Number two, can the vehicles be manufactured at increasing scale? And three, is there leverage on per unit costs? Rivian's recent success is also answering a fourth question. In our view, can an OEM drive a positive brand halo effect ahead of launching its next generation vehicles? We think Rivian investor sentiment should start to reflect increased confidence in its R2 vehicle, which opens up a significantly larger total addressable market. Now, if we're looking at the graph here, we can see on the weekly basis, we're not even close to being overbought. RSI is still bullish, and that big green candle from last week went over that 200-day moving average like a king. And currently, as I'm looking at the pre-market, we are going to have another green day. Of course, a lot of things can change in the next coming hours and days, but currently sitting above that 200-day moving average is a pretty good position to be in right now. And so to conclude, is it time to sell Rivian? Well, like I said, there's no shame in taking profits. If you want to close out your whole position because you're up 70%, go do so. If you believe in the long-term future of this company, then again, keep your position, maybe take some profits, no shame in that. There's a lot of positive momentum right now with the company and with the stock itself, but do note that this company is still burning a lot of cash, and I don't really see that improving so fast anytime soon. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.